heat is so low. I don't know why, but I am, yeah, we had, so big storms. I don't know how many of you follow me on Facebook, but while I was gone, we had a giant storm flood. The water was waist deep in my backyard. And I'm in Southern Virginia, for those of you who know. I'm not in Texas. And so anyway, so the power went out. We had like all sorts of stuff we had to get going in the studio here before I could get going. So here I am. Hello, hello. I'm so glad to be back. Yeah, it's been a while since I have been here with you. Last week, I was on a cruise to Alaska, and so grateful for Lindsay. I didn't watch the recording or anything, but I assume she was amazing. Lindsay is always amazing. And so Lindsay took care of everything. And then the week before that was the 4th of July. And then the week before that, I was with my business coach and mentor for a 2-day summit thing with high performers. So I did just the call. I just did the drawing, I think, like later. So it's been a while since I have been here, but some of you I think are new. So if this is your first time, let me know in the chat. I want to know my chair. We got in, we were rescheduled, we were figuring out the Candy, woohoo, and Kay Sullivan, and Mohammed, and Monica, and oh my gosh, Diani, did I pronounce that right? Keela, did I pronounce that right? Kyla, maybe? I don't know. Anyway, so grateful to have you. Kelly, oh my gosh, we've got so many new, this might be the biggest newcomer call live stream. Keela, got it. Doc, all right. This might be the first, like the biggest bunch of new people on today's call. I'm so excited to have you. So we've got some good stuff to cover today. I hope that, let me pull up, because we're going to do everybody's favorite topic today, which is the debits and credits. We're going to be talking, everyone loves to hear my debits and credits explanation, and we are going to be doing that today because we're going to be talking about depreciation. And depreciation requires a journal entry. Well, sometimes. If you are on QBO Advanced, there is an automatic fixed asset depreciation thing. We're not going to go over that today, but we are going to be covering debits and credits because you have to do a journal entry, and so you need to know. I gotta just pull up my thing. Okay. All right, I gotta make sure I am ready. All right, here we go. All righty. Everyone needs Sherry. Always loves to hear. Sherry has heard my debits and credits. Sherry is in Bookkeeping Fast Track. She has access to my debits and credits explanation all the time, and yet she never gets tired of it. So that's awesome. I love you, Sherry. Okay, let's go ahead and get started first with my intro so that the people on YouTube know what on earth they have stumbled across. It's been so long since I've done this, I cannot remember how to click the buttons. Okay. All right, I think we are good to go. I think you can see my screen. I cannot see where. Okay, please confirm that you are seeing my screen because I am not seeing Yes, good to go. All right, good. Because I, for some reason, am not seeing it reflected on my screen. So, all right. So, hello and welcome. My name is Margie Remmers-Davis, and I am the founder and CEO of Acadian Accounting Education. And this is our weekly live stream that we hold every Friday at 11 a.m. Eastern inside our free Facebook group, the QBO Gym Locker Room. The QBO Gym Locker Room is your spot for hands-on practice using QuickBooks Online. That is what we do all day, every day. Practice, practice, practice. You cannot learn how to ride a bicycle without actually doing it. You can't just watch a YouTube video. You have to actually get on the bicycle. We're so grateful that Intuit provides a sandbox play area, sample company, test drive, where we can go in and we can not just learn concepts like I'm going to talk about today, but actually do them hands-on. So as a member of the Facebook group, you have access to a free QBO QuickStart course. Okay, so for those of you, there are so many of you that said you were new. So if you are new, make sure that you have access to that. When you joined the locker room, we asked you for your email address because we've got to send you your free course. So if you can't find it, if you don't know where it is, if you don't know what I'm talking about, please reach out to support@acadian.com. That's AKADIAN. And you do not need to see that notice from my lovely friend. So write to support@acadian.com so that we can get you situated. That QBO QuickStart course is going to teach you how to sign up for your free accountant account. So as an accountant and bookkeeper, you have a special version of QuickBooks Online that is different than what the regular business owners that get QuickBooks Online. Okay, so make sure. So it's going to teach you how to get that free course, or how to get that free QBO subscription, what to do even if you don't have a business yet, because it will ask you like questions about your business. All that good stuff. It'll teach you how to navigate terminology and the what was I going to say? Workflows, like how everything works. And of course, it comes with hands-on practice so that you know actually what you are doing when you're getting into using QuickBooks Online. Also, as a member of this Facebook group, you have access to over 100. We might need to count these. I think we might be at 200 now. I don't know, at least 150, I think. Free exercises. So people are always asking, how do I get these free exercises? This is what you do. In the Facebook group, there is a featured tab. You can go there, or there are these tiles that are the things that are featured. And one of them is this one that says, welcome to the locker room. And there is a link in there for over 100 free hands-on exercises. That is how you get your free exercises, okay? So you also get a free exercise of the week, which is why you come here, because you get to follow along on our weekly live streams. This is how you get that free exercise of the week. And you have to be live in order to get the link to follow along. That's why if you're watching this on YouTube, come join us. Link is down below, etc. Okay? All right, so we are going to get started. Today is today's exercise is part of the level 2 Pro Advisor test. Okay, so if you are brand new, like if you don't even have your QBO QuickStart course, you like don't know anything, then this is going to be a little bit over your head. But what you'll always hear me say is you might not be able to soak everything in, but you're going to get wet. Okay, so this is a topic that is covered on the level 2 test. Now, the exercise of the week is part of our product called the QBO Gym. So everything I've talked to you about so far, free group, free course, free exercises, free weekly class, all free. We do have a course, a product. It's not really a course. It's a product that is called the QBO Gym. Now, the QBO Gym that's not it. This is it. The QBO Gym is for those of you who say, gosh, maybe I got certified, but I still don't know what I'm doing. Like, what is it? What is actually a life in the day of the book? What is like? Can't talk. What is life like a day a day as a bookkeeper? I wish that I could be an intern somewhere. Can I volunteer for somewhere just to like get my feet wet and understand what bookkeeping is all about? That's why we created the QBO Gym. The QBO Gym is a simulation of being a bookkeeper. You get to work on the books of a fictitious client for an entire year. I'm not talking about a calendar year. I'm talking about like years worth of books. We like to say that we train bookkeepers like NASA trains astronauts, okay, through simulations. So Joel is going to put, if he hasn't already, the link to the QBO Gym. You can try it out for free. You can try out the first month just to see what it's like and then decide if you want. So that's what he's put in there, the link to the 5-day gym. It's a challenge. I mean, it's free. It's not the same as a free trial, but it is an opportunity for you to, get it. And he can also put the link if you already know that you want to get started. Okay, so the QBO Gym, everything in the QBO Gym is connected to our proprietary dashboard. So, and our proprietary dashboard is called BooksMatch. BooksMatch is, in general, just your dashboard where you access your courses. However, if you are subscribed to the QBO Gym, then we also track the skills that you're learning in the QBO Gym. And that's what you see right here. Randall needs to change up his picture. This is just our whole placeholder. So anyway, so we are tracking the skills that you're learning. We track them by skill group. You can get insights into more detail for each skill group. You can see how you compare to everyone else in the group. We track 3 specific metrics, which is your overall knowledge. That means all of the stuff, all of the skills that you've learned since you started. So Randall's doing great here. He's excellent. But we don't want to, we don't want the people who've just been around a long time to outshine the people who are brand new and kicking butt. And so that's why we have this metric called speed, which is not how quickly you get through an exercise, but it is how many skills you acquire within a week. So so somebody who is brand new and kicking butt will see a really high speed here, even if they haven't accomplished that full total of knowledge. So, and then the most important metric right here is consistency, is that we want to track that you are consistently upskilling, that you're consistently doing that. The reason that we did this, the reason we created this whole dashboard thing was so that we could show you off to the world. We're like, look at all this great, all these great bookkeepers who are actually doing the thing. They're not just putting on a resume that they know something. They're not just saying, oh yeah, I got a certification. They're not just saying, oh yeah, I have 20 years of experience, because that just means they're old. It doesn't mean they're good. And so we wanted to show off people, and we worked with a recruiter to develop this dashboard. And she actually said that the hardest thing for her was reaching out to people who were no longer looking. And so she wanted us to create a little thing where we had to go in every week and say, yes, I'm still looking. Yes, I'm still looking. Yes, I'm still looking. And so we said, well, once a week, that's a lot. So we made it every 2 weeks. And we said, instead of just like checking a box that said, yes, I'm still looking, why don't we actually make them do an exercise? And so we have, in order to keep your consistency high, if you're enrolled in the QBO gym, then you need to do an exercise at least every 2 weeks. That just keeps your stats up and keeps you visible. So this is like, we built this all out with the QBO gym in mind, and we said, well, we want to go show these people off to hire people who are going to hire you, right? Like, we want you to make money. So we said one of the groups that we want, that we think would really want to know that we have these amazing bookkeepers doing these amazing things, is accounting firms. So we started reaching out to accounting firms, and all of them said, but do they know bookkeeping? You see, the QBO gym is all about learning QuickBooks. And that had always been our focus. And so they said, but do they know bookkeeping? Do they know debits and credits? So we developed a product or a course called Bookkeeping Fast Track. And what that allows you to do is lay the foundation and it takes somebody from, I know nothing about bookkeeping, to being a super elite, high quality bookkeeper. So Joel will put the link to that in the chat too. But the reason that I bring it up, 2 reasons. One is because we developed Fast Track. That's done. It's out there. It's for sale. Many of you on the call are taking it, love it, whatever. But it's not reflected on BooksMatch. So that's our next thing coming up, and you will see. I really wanted it to be before the end of summer, and I think I may have announced that it would be before the end of summer, but our developer is on a long vacation, and so it might not be until the fall. But in the fall, but definitely I think by the fall, we are fully redesigning BooksMatch, so it highlights not just your QBO skills, but it actually highlights your knowledge of bookkeeping as well. So if you have any feedback, like if you have been, oh man, I wish BooksMatch did whatever, now is the time. Write to support@acadian.com. Say in there that you have feedback on BooksMatch, and Margie asked for it on the live stream. So write to, again, support@Acadian, AKADIAN. And we are, because now's the time. I'm redesigning it. I spent, like 2 weeks ago, I spent 2 days with a team member just like drawing stuff out and how we're going to do it and like all the stuff and how it's going to look different. One of the things I know people complain about that's going to change is this is an accountant profile. I'm looking at this as if I was a recruiter trying to find this. But you guys who take the courses, your little go to my courses button is super tiny, and we get a lot of support questions like, well, how do I get to my courses? Because the button's so tiny. And so, we're going to be moving that, making it more prominent. Like, that's one of the things. Making your profile here also more prominent, making it obvious what courses you need to take next, all sorts of things we're putting into this BooksMatch redesign. So anyway, let's see, okay, good. Yes, thank you. My team is putting in all the links for everything. All right. So enough about that. Let's talk about the exercise of the week. That's what we're going to do today. The exercise of the week. So remember I said that consistency is our most important metric. Well, if you've done all of the exercises in the gym, then nothing's left for you to be able to do to be able to like keep your consistency high. And so that's why we're like, oh, we've got to have an exercise every week so that people can continue to do that. So if you are subscribed to the gym and you have earned at least 250 points. I always forget to mention that the gym makes it really fast, fun, and easy to learn. Everything we do at Acadian is all about being fast, fun, and easy. And this is, you probably can't see that, but it is in my way. There is a little button down here where you can see the whole thing is gamified, so you're all earning points and bells and whistles and like all this stuff, and it's fun to go through. And you can see how many points you have accumulated by clicking this this little arrow at the bottom. Okay, so my little demo thing has 105 points, and if you accumulate 250 points, then the exercise of the week unlocks. It's actually a separate course in your dashboard, and that's 2024. We don't want 2024. How do I get to 2025? My assistant. Okay, here we go. All right, there we go. 2025. So anyway, if you are subscribed to the gym, do not use the link that Joel is going to put in the chat. He hasn't, oh yeah, he's put it in already. Don't use that link. The link that's in the chat is for those of you who are not subscribed to the gym, or who are subscribed but don't have it unlocked yet, okay? Because the only way for you to get credit, get BooksMatch credit, is to do it inside the course. So you have to click on this link, which is the one I'm going to do. We're learning about depreciation journal entries right here. So I'm going to click this, and then once I'm done, I'm going to click this button, and that's how I get BooksMatch credit. Okay, so if you have the gym, use this. If you don't have the gym, use the link that Joel put in. All right, let's get started. All right, so we're going to talk about, as I mentioned, this is a level 2. This is a level 2 topic that is, it's tested on the exam. And for those of you who are studying for the Pro Advisor exam, all the Pro Advisor exams are come with 5 separate courses. So you take these 5 separate courses, you take the exam at the end of the course, and then that's how you get your certification. If the whole process of certification is new to you, then Joel, if you could put the Everything Doc link in the chat, then we have a free ebook that walks you through how to. It actually includes signing up for your QBOA account, but it walks you through the whole process, like where to find the training from Intuit, where to find the test, some tips and tricks for working through it, etc. Okay, so if you're brand new to the whole Pro Advisor certification process, then click the link that Joel just dropped in the chat and get that. Now, we do have some people who say that they filled out the form and that they didn't get the ebook. So it's supposed to be emailed to you right after. So if you can't find it, write to support@acadian.com. And Mohammed says, I have taken your recertification course and successfully passed it in the first attempt. Awesome. So anyway, now, Mohammed, you were so awesome, you threw me off track. Okay. All right. So let's talk about, I was saying that there's 5 courses. Okay. So you get the 5. So when you go through when you're in your Pro Advisor account, and you have to enroll in the certification. In level 2, you have to have taken level 1 first. So level 2, then you enroll, and then there are 5 courses to take, and one of them is called year-end tasks. So this is where that section is. If that's beyond you, I know we've got a lot of new folks. So if that is beyond you, don't worry. Don't worry about soaking it in. Just get wet. Okay? All right. let's talk through this scenario. Okay, so here we go. Craig's CPA, Pam, sent you a note asking you to record last year's depreciation on his truck for $1,200. Okay, let's talk about depreciation for a moment. And I'm going to stop the screen share because I want to talk to you face to face. All right, so let's just talk about depreciation for a minute and what that means. When you buy an asset, okay, so you buy a vehicle, like in this example we're talking about a truck, or you buy a piece of machinery or equipment. This, what I'm about to talk about, does not apply to land, like if you're like a piece of property, and it also doesn't apply to intangibles like stocks and bonds and CDs and like all that kind of stuff. Okay, so I'm talking about tangible assets, machinery, equipment, vehicle, etc. Okay, so when you buy that thing, it's going to cost, we're talking about expensive things, right? So let's say it's $10,000, okay? When you buy it, you don't want to record it as an expense for $10,000 because that will inflate your expenses. It will inflate your expenses for the time. Christina's asking for the link. Yeah, it's earlier in the chat, so we can just add that. So if you say it's an expense for right now, well, you're not really using that. We're going to say that it's a truck. You're not just using that truck at the moment that you buy it. You're going to use that truck for a period of time. Okay, so you're going to use that truck for, say, 5 years before you then sell it, trade it in, like whatever you're going to do with it. So what you're doing, what we do in accounting is we say, okay, we take that usable amount, they call it and then we spread it out over what's called the useful life of that thing. Okay, so if it's 5 years, we're going to take the amount that we paid for it and we're going to say, well, this isn't an expense just for today, just for right now. We're going to spread it out over the useful life of that thing. Now, most of the time, the reason it's in the year end is most of the time, the way that happens is the accountant or, the tax preparer, CPA or whatever, will do this calculation. There's all sorts of different types of calculations, different ways of depreciating for different reasons. The accountant, the tax preparer, whatever, CPA, is going to determine which method to use and will do the calculations and will then tell the bookkeeper, okay, put in this amount of depreciation, and it's usually done just once a year. Now, it would be better to have it depreciate over, every month so you could actually see a better picture, but most of the time it's not done that way. Most of the time it's just done once a year. At the end of the year, after the taxes are filed, the accountant, and sometimes you have to ask for it. Sometimes it doesn't just automatically happen that they give it to you. Sometimes the accountant will go in and do it themselves, add the depreciation. There's all sorts of ways that this could happen, okay? But the general thing is, at the end of the year, the accountant's going to give you the amount to depreciate for that thing, okay? And then that's when you're going to recognize that expense. Another important thing, remember that expenses reduce your tax liability, okay? So, for the business. Expenses decrease profit, and profit is what you are taxed, or is what the business owner is taxed on. So we can't just, when we buy an asset, we can't just say that, oh yeah, we have this $10,000 expense, and therefore we're going to pay less taxes. Well, the government doesn't like that because the government says, well, yeah, it's not really an expense right now. We're just going to, that expense is going to be over the useful life of that thing. And so when you purchase the asset, it's going to be what's called capitalized. So it's put on the balance sheet, not on the profit and loss. That whole process we are not talking about today. Like that's a whole thing. That's a whole nother lesson. And we actually don't have that in the gym, but we're going to be adding it. Coming up, we're going to be adding that. It is covered very thoroughly, very, very thoroughly in Fast Track. Okay, so that whole process of buying assets, how to put them on the books, how to capitalize, like what that means, how it's not on the P&L, it's on the balance sheet, all of that stuff covered very thoroughly in Fast Track, and soon we're going to be adding it to the gym. Okay, all right, let me go back and share my screen again, and and let go. I needed you to understand that. Okay, so what we're talking about now is the truck has already been purchased on the books, and now we've heard from the accountant, and the accountant says you need to record the depreciation. Okay, so that's what we're doing now. All right, let me share my screen again. Sometimes, for those of you who are new, I do this every so often. I stop sharing my screen and we have a heart-to-heart. All right, let's go. Okay. So Pam sent you a note asking you to record last year's depreciation on his truck for $1,200. As a bookkeeper, it is typically not your job to calculate depreciation. It is, however, your job to enter the numbers in the books that you receive from your client's accountant. Let's see how to do that. Okay, so the first thing that we need to do is we need to be in the sample company. As I mentioned in the beginning, all of our exercises are done in the sample company. That's how we are going to be hands-on. There's two ways to do that. So you can follow these instructions that we have in the exercise, which are to, you have to log into your QuickBooks Online accountant account, go to the gear icon, select sample company. You're going to get logged out of your personal account, and then you click continue. Or you can just use our quick link, which is acadian.com/QBOA. And Joel will put that in the chat too. Either way is fine. We are going to get into the sample company. So I'm going to click I'm not a robot, because when you prick me, I bleed. All right. Here we go. Now, before we do anything, important. Last week, for those of you who were with, let me just back up like a month ago before I left. Let me get off screen share for a second while I tell this story. If I can remember how to do it. Okay, stop share. Okay, here we go. So like, I don't know, a month ago was before I left. All of a sudden, the sample company stopped having a chart of accounts. Just suddenly, just was missing the chart of accounts. You couldn't access it. You couldn't add to the chart of accounts. It was crazy. And so on our live stream, we went and flooded the feedback with everybody that was on the call. We flooded the feedback and said, give us back the chart of accounts. We can't function without the chart of accounts. So we did that, however many people we had on the call that day. We flooded the feedback, and magically, and like the next day, or very shortly thereafter, we got the chart of accounts back. And I said, dang, I don't know if it was us or all the other people that were complaining about it, but I was like, we're going to use our power every week. So last week, while I was gone, Lindsay had you guys flood the feedback about purchase orders, because purchase orders are broken in the sample company. Now, Intuit is making massive changes to QuickBooks Online. If you have not heard, there is a new interface that is coming. It's actually already here. So right now, all new clients are going to have this new, it's a completely redesigned dashboard in like the way that it works in QuickBooks Online. So all new clients right now have the ability, will automatically get that. And then now through the end of August, you can opt into it. You can opt your clients into this new interface. But you could also opt out if you don't like it. But then beginning in September, everybody, there's going to be no option. You won't be able to opt out anymore, and you will have to use this new interface, okay? So we want to see the interface. We want the sample company to have the interface. So they're doing all sorts of stuff behind the scenes. I don't know when they're going to give us the new interface in the sample company. If we don't have it by next week we're going to flood the feedback and say, please give us the new interface. But for today, I want you to flood the feedback about purchase orders again, because we still don't have purchase orders in the sample company, and it's ridiculous. Okay, so here's what we're going to do. Everybody today, right now, before I forget, right now, while you have the sample company open, let me just check. We just check to make sure they haven't put it in. It looks like a purchase order for a second, and then this is what happens. We get this error, okay? So no. All right, so what we're gonna do is everybody together, I'm just gonna go back to the dashboard. Okay, you're gonna click the gear icon, and then you're gonna select feedback, and in your own words, you're gonna say, please turn on purchase orders in the sample company. Now, we call it the sample company because you notice I hit gear icon and I selected sample company. But internally at Intuit, they don't know that term. So they call it the test drive. So you want to make sure that they know what you're talking about. Okay, please turn on purchase orders in the sample company test drive. We need to be able to practice. Or whatever, use your own words, whatever. Okay, all right, then you're going to click next, and the feedback has been sent. Oh, what? Irma says, I have purchase order in the sample company under new and accountant tools. Yes, it's there, but you can't click it. So if you click it, go to plus new, like you saw me do just now, plus new, and then click purchase order. It gives you an error, message. For me, I see it for a second, or I did the first time. I see it for a second, and then it gives me this error. So I'm clicking the X to get out of it, and then I still have the error, so now I have to go back to dashboards and select home. Yeah, see? Yeah, so everyone flood the feedback about purchase orders, and we'll see if 2 weeks in a row of us doing this. I do know that they read the feedback. Like, they actually do read the feedback, although I think I heard that they have their feedback meeting on Fridays. So it's possible that last week when we did it, they're just now reading it. Thank you, Uyi, for sending in feedback. All of you sent in feedback. Okay. All right, so let's get back to the exercise. All right, so now that we have the sample company open, okay? So here it says, a note about depreciation. In accounting terms, depreciation does not affect the resale value of the truck. This is important. Thank you for all of you sent the feedback. Woohoo! Okay, so in the accounting world, the term depreciation is the use of the vehicle over time. Okay, that's different than depreciation, which in the outside world, outside of accounting, which refers to how the resale value lessens. Okay, so let's say for example you have a useful life of 5 years of this. Okay, well at the end of 5 years, so we're gonna use up all of that. Say we spent $10,000, we're gonna use all of that up over the 5 years, but and it will on the books be zero at the end, but that doesn't mean that we can sell it for zero. Okay, in the outside world, outside of accounting, over 5 years, it depends on what it is. Like you might be able to still sell it. If it's a Jeep, maybe it's still worth $10,000 after 5 years, So thank you for all of you guys sending the feedback. This is awesome. Okay, so you just need to know that the term, just like when we talk about debits and credits in a minute, the term in accounting is different than the term in the quote real world. Okay, so that's what this is. So in other words, it doesn't mean that the truck is worth $1,200 less. Rather, depreciation simply reduces the book value of the truck to reflect the use and wear and tear of the truck over time. Okay, so just wanted to get that clear. Now we're going to get started with the exercise. Okay, now you'll notice that when I am on my exercise and I am hovered over this white tile right here, I have this little Star Trek icon right here. I'm a nerd, yes. And this little icon, if I'm using Google Chrome and I have the Google Chrome extension called Scribe, it looks like this, then I will see that little Star Trek icon. Okay, we create all of our exercises using a software called Scribe, and they have this extension. Whereas if you have it loaded and you're looking at this, I can click this little button. It used to say, Lindsay, we should change the instructions because it's been a month now and it used to say guide me right here and now it's gone. So we should probably change our instructions. And so it says, do you want to start guide me? And I'm going to confirm. And when I do that, magic happens and I have both the sample company and the exercise on the same page. All right. So, all right. Lucia, yes, you'll send the recording will be in the Facebook group. And yes, thank you, Uwe, for answering that question. Sherry, we are sending in purchase order feedback again today because it's still not fixed. So next week we'll send something else. But all right. So now I have my exercise, my sample company, and my exercise side by side, thanks to the that little Scribe Google extension. I'll show it to you again. It's called Scribe. It looks like that. Okay. All right, so here we are in the exercise. Okay, so now we have to, in order to do this exercise, I have the exercise there twice. Where is my QuickBooks? There we go. So, so now I have the exercise and the thing twice. All right. I don't have it twice anymore. I have the sample company and I have the exercise side by side, and it's magic. Okay, so now I'm going to do is I'm going to create a journal entry. Now, journal entries are used for any time that you have to do something in the books that QuickBooks Online does not already have a transaction for. If there is a transaction available, always use the transaction, because those transactions are linked to all sorts of other things, okay? So if there's a transaction available, use a transaction. The journal entry is only for when you have to affect the books and there is no transaction already for it. So depreciation is one of those things. As I mentioned, if you have the subscription level QuickBooks Online Advanced, there is a transaction to be able to automatically add depreciation to fixed assets. I'm not going over that today. That's not what's on the test. Well, it's on the test, but that's not what we're coming over today. There is practice for that in the QBO gym. So, all right. All right, excellent. Okay, so that's what we're going to do, is we're going to go to the journal entry. Now, if you have never, all right, well, first of all, let me do this little part. Okay, so this journal entry is used to adjust the book value for last year, which will be used on the tax return. For this reason, the date of the journal entry will be the last day of last year. Okay, so in our example right now, this would be 12/31/24 is the date that we would use. Okay. All right. So, okay, that is your journal. Okay, now we're going to add a description. So right here it says journal number, and it will automatically keep track of the numbers. But it's always best to add a description that is like of what you did, so that you can find it later, rather than just the number. It doesn't tell you anything. So, all right, so let's add a description for this journal entry so it's easily understood what this is for. While it would be nice to be more descriptive, characters are limited in the journal number field, despite it looking like a gigantic field. I love that we said the word gigantic there. So yeah, despite it being like this huge field, it actually is only 21 characters. Okay, so we are going to say that it is this truck depreciation. Okay, right here. Oh, I can't even fit all of that. Okay, so we're going to say 24 truck depreciation. Okay. Your number, yeah, see the picture is 23, but we're doing 24. Okay. Alrighty. Let's see. Now let's fill out the journal entry. You will need to select the depreciation amount, but as you go through the list, you will see that there are 3 depreciation accounts showing which one is the correct one. All right, I'm putting a pin in this for right now, because now we need to talk about debits and credits. We need to understand what exactly we are doing in this exercise. All right, so I'm going to shift gears and talk about debits and credits. We're going to talk about why we're doing, there's 2 different types of depreciation accounts and what they each do. Okay, we're going to come back to that. But for right now, we're just going to talk about debits and credits. Okay, all right, so hopefully this works. I can get this on my screen. Okay, so whenever you whenever you record something, so what we're doing, debits and credits, is called double entry accounting. That means that when you enter something on one side, you have to enter an equal amount on the other side. In other words, the entries must balance. Okay, so you can think of your debits and credits like a seesaw. I'm just checking. Okay. For some reason, I can't see your comments anymore. Here, let me move this so I can see if there are any questions. Okay. All right. So here we go. Here's our seesaw. So you can think of debits and credits like a seesaw. So on one side, you have debits. On the other side, you have credits. If you add something to one side, then you have to add something to the other side so that it balances out. Okay? Now, the first thing that you have to know is my head cover. I can't see where my head is, and I can't move it when it's on Zoom. I think my head is covering up credit. So anyway, hopefully you guys got it. Nope, I'm fine. All right, good. Thanks, Lindsay. All right, so the first thing that you have to understand in order to wrap your head around debits and credits is that each type of account lives on one side or the other of that seesaw. Okay, they naturally live there, and that's what's referred to as the natural balance. Okay, so that is where they start. Okay, all right, you have to memorize this. There is no getting around. There's no getting around having to memorize this. When you learned to read, you had to memorize the alphabet, right? When I'm a musician, and so I had to memorize key signatures. Like, it's just like there's just things in life that you have to memorize. You have to memorize where they start. Once you know that, once you understand that, the rest of it is easy. Okay. All right. So let's talk about natural balances. Okay. So we're going to draw a line on the middle of our seesaw. And on the right side, we're going to keep track of where money comes from. Okay. And on the left-hand side, we're going to talk about where money goes. In other words, the destination. Okay, so on the come from side, that's come from, that's the credit side, and the destination, the debit side. Okay, so where the money comes from is on the right hand side, where the money goes is on the left hand side. So where does money come from in a business? Well, one place that it comes from is the income. That's like when you sell something, you sell your product or service, the money comes from your customers. That's income. It's also referred to as revenue. Okay, so that's one thing that lives on the right hand side. What's another place that money comes from? Well, it comes from the owners. Okay, the owners put money into the business, and that's another place that money comes from. So it could come from the customers, could come from the owners. When it comes from the owners, it's referred to as equity. Okay, so that's the money that the owners put in. Okay, and there's only one other place that money could come from. It is from a loan. Right? A loan or a credit card, it's money that you have to pay back, and that's referred to as a liability. Okay? And that's it. Okay? Those are the three places that money comes from. Comes from selling stuff, revenue that you've made. It comes from the owners. The owners put money into the business, or it comes from the bank, whoever is giving you like the loan. Okay? So, and you have to pay it back. That's why it's called a liability. Okay? So, where does money go in a business? Well, it only goes one of three places. It goes to, yes, Keela, But first we're going to talk about assets. It goes to assets. These are the things that you own. So assets include fixed assets, like what we're talking about with this truck, okay? It also includes just like putting the money in the bank, okay? That's also like a bank account, checking account, savings account, okay? Those are assets. So your money is either going to go into an asset, it's either going to go into the bank account, or it's going to go into a thing that you own, the vehicle, the equipment, the machinery, right? It's an asset, okay? And then, as Keela pointed out, the next place it goes to expenses. These are the things you have to pay for. As you go throughout your business, and you have to like buy stuff, and you give your money to the vendors, and so expenses is one. And then, what's the third place it goes? There's only one other place it goes. Once you have all of that taken out, it's going to go back to the owners. That's the benefit of owning a business, is you have money that it generates and then it comes back. So owning a business means you're not just earning a salary. If you if you are a corporation, for example, an S Corp or a C Corp, and you work for the business, but when you own it, you get that profit, right? And that profit is distributed, okay? So it's distributed to you either as a distribution or a dividend, or an owner's drop, but that money comes back. That's the other place that it goes, okay? And that's the 3 places. So as you can see, we've got the word dealer that can help us remember what our where the natural balances are, where it where it lives. All right, I can't remember what else is on my slides here. What do I need to keep talking about? Let's see. Let's keep going through the slides and see, because we've got to talk about, once we understand where the money lives, then we need to understand how it moves. Okay, so the natural balance is the starting place. Okay, so you've got the starting place, and then you have where it moves. Okay, so I can't remember what's on the slides here. Let's see. Oh yeah, this is a cool thing. This is a cool thing that I think kind of like helps you remember things. And that is that everything on each side is connected to the other. So on the right-hand side, we have owners in the form of equity, and we have owners on the left-hand side in the form of distributions and dividends. Then we have vendors on the left-hand side and customers on the right-hand side. Those are kind of connected. And then we have things that you own, which are assets, and things that you owe. And what's cool to me to think about is that these are often, not always, but often institutions. So you have an institution where you, like a bank, where you hold on to your money, but then you also have an institution that you might have to pay back in the form of a, if you got a loan, right, from an institution. Anyway, so I think that's really cool. All right, so as I mentioned, this is where they live. Like, that's the key thing that you have to remember. That's your alphabet. That's your key signature. Like, that's your, like, I don't know what you're involved in, like, but you, like, that's the stuff you have to remember, is where it lives. Okay. Once you know that, the next thing you need to understand is how they move. Okay. And we're going to come back to, I promise, we're going to come back to our depreciation once we understand this. Okay. So we have, on the left-hand side, we have our debit side, that's the DEA. On the right-hand side, we have our credit, which is the LER, okay? And when accountants talk about debits and credits as a noun, okay? So this is a debit, you can say it either as a noun or as an adjective. If it's a noun, like this is a debit, or this is a credit, or this is a debit account, or this is a credit account, okay? They're always talking about this right here that I've already described. When we're using the term as a verb, debit always means moving to the left, okay? So if you say if the accountant says to you, I want to debit that, I want you to debit that, that means you're going to put it on the left. Even if it's an account that normally lives on the right, debit means it's going to be on the left. And credit always means moving to the right. The hard part, the reason why our brains get like all jumbled up when we're trying to get our head around this, is when people use the terms increase and decrease. Did that account increase or decrease? And people confuse, like, because if it's a debit and it increases, it's on the left, but if it's a credit, it increases on the right. And so that doesn't compute for a lot of people. So let's understand. Let's just take a few minutes to understand how it works and why it works that way, and then we can go back to our journal entry. Okay, so let's talk about this. Now, in order to understand this, we're going to have to go back to some middle school. I want you to go back to your middle school math. I think this is covered in 7th grade. I don't know. I'll have to ask. One of my team members used to be a math teacher, so I'll have to ask her. But so this is the math when you learned how to graph numbers. Okay, when you learned how to graph numbers, you had a line down the middle, which we've already got here, and then you had a line across. And what did you have in the middle? You had 0, okay? And on the right-hand side, you had positive numbers. You all remember this. On the right-hand side, you had positive numbers. They went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? Up, okay? And if a number increased on the right-hand side, it went further to the right, okay? If a number decreased, it went further to the left, okay? That right-hand side, that positive side, easy peasy, okay? But then it got a little complicated when we were talking about the negative numbers, which were on the left-hand side. Now I want to make it super duper clear that when we're talking about the numbers in accounting and on the debit side, these are not negative numbers, okay? But you can think about how negative numbers work and it will apply to what we're talking about. Okay, so on the left-hand side, when we've got negative numbers were more negative on the left. So they increased left. Okay, so -1, -2, -3, etc., -10, -20, kept going further left. It was increasing its negativity, okay? And then when it was less negative, when it decreased, it was moving to the right, okay? So that's how you can get it in your brain if you just know which side does it live on, and then you think about, is that number increasing or decreasing, okay? There's all sorts of charts out there. You can get, mouse pads and with T accounts that show you like, oh, this type of account increases this way and this type of account decreases that way and all that stuff. But you don't need any of that if you understand the principle. If you understand, oh, this is where it lives. So if there's less money in that account, well, is it moving this direction or this direction? Okay. All right. So do I have time to go through a couple examples? I think I do. Okay. So let's go through just a couple of examples to kind of see how this works. So let's say that you sold something for $250 and deposited it into your checking account. Okay, so you sold something for $250. That means there we go. That means you made, excuse me, $250 in revenue. Okay, you made $250. Revenue is what kind of account? It is a credit account. It lives on the right-hand side. Okay, and you deposited that money. Where did it go? Into your checking account. Oh, it increased. Sorry, I forgot that one. It increased your checking account, which is an asset. Okay, so the asset also increased, but it increases on the left-hand side. So now they are balanced. Christina says, this is my favorite part of Margie's teaching this. Yay, I'm so happy. All right, I could teach this. I told my team, I could teach this all day, every day. Like, this is my favorite thing to teach. Okay, so they've both increased. See how they've both increased? But they increased in different directions, okay, because of where they live, okay? All right, so let's do another one. So now we're going to say you bought something. So you didn't make money. You bought something for $250 and you paid for it with a credit card, okay? So you bought something, that's an expense for $250. Where do the expenses live? They live on the left-hand side, right? Did the expense increase? Yes, so it stays on the left-hand side. You've got more expenses, okay? And you paid for it with a credit card. That's a liability. And now you owe more. You owe more because you bought this thing. You now owe more. They're both increasing, but they're increasing in different directions, okay? All right, let's do a couple more. Aw, Kelly. Kelly says, I just spent all day yesterday studying this. Your teaching is awesome. Oh, you guys. All right, so now let's shake things up a little bit. And let's say you bought something for $250 and paid for it with a debit card. So not a credit card. Now we're paying for it with a debit card, which means it's coming straight out of the checking account, okay? Well, the expense is still the same. We increased our expense for $250. Expense lives on the left-hand side. It increases, it stays there, okay? But now it came out of the checking account, which is an asset. An asset lives on the left-hand side. Is there more money in the checking account or is there less money in the checking account? Okay? There's less money. It decreased, which means it decreases on the right. So now we're going to move it over on the right-hand side. Okay? Oh, and I've got a little pointer there. Okay. So now, instead of the previous two examples, they increased in the same direction. I mean, on the opposite directions, right? So now we've got one that increased and one that decreased, and now we've like moved it over. All right, let's do another one. All right, so you paid $250 toward your credit card with a check, okay? You paid $250 toward your credit card with a check, okay? Well, what happened to my little thingy? Okay, so $250 was a liability. Do you have more liability now or do you have less liability? Well, liability lives on the right, but now you have less. You paid it off. So now you have less liability. So that means it's going to decrease over on the left. Okay? How did we pay for it? We paid for it with a check. That means it came right out of our asset account. That $250 normally lives here. Do you have more in your checking account or less in your checking account? You have less in your checking account. It decreased and it goes over to the right. So now in this scenario, you've got this little crisscross. Okay? All right. So that's our debits and credits. Let's go back to our, now that we understand this a little bit more, let's go back to our depreciation. Okay. All right, so now let's fill out the journal entry. You will need to select the depreciation account, but as you go through the list, you will see that there are 3 depreciation accounts showing. Which one is correct? Okay, so let's remind ourselves what we're doing in our scenario. Okay, we bought an asset. That's recorded elsewhere. Our purchasing of that asset is recorded elsewhere, okay? What we're gonna do is we're gonna take money out of the value of that asset, and we're gonna add it to the depreciation expense. So we have 2 accounts, one that is going to decrease the value of that asset, and one that is going to increase the expense on that asset, okay? All right, in the sample company, however, there are 3 depreciation accounts. The first is the depreciation expense account. This is the used amount that will show on the profit and loss, and it's the one that we want. The other 2 depreciation accounts reduce the value of their corresponding assets. In a real life scenario, naming the expense account differently to distinguish it from these other 2 accounts would help make things clearer. We'll see that just in a minute, okay? All right, so the account that we're gonna use here is depreciation, okay? This is other expense, okay? So this is the expense account. Where does the expense account live? I'm going to let you guys answer. I've been talking a lot. Where does expense accounts live? On the left. Excellent, Christina. Okay. Is there more expense or less expense? Is there more account or less? Exactly. There is more expense. So it's on the left. So it's going to stay on the left, okay? So we're going to debit that depreciation expense. Now, as I was saying in the exercise, in a real life situation, you probably want to name this account depreciation expense, so it's more obvious that this is the one that is the profit and loss account. That's the expense account, okay? All right, so we've got $1,200. Okay, and we could put the exercise doesn't have you putting in a description. You could put in a description. I guess we're not going to in this exercise. All right, so then on the second line, we're going to select depreciation. Okay, but this one is a different type of account. Okay, so it's a sub account of truck. Okay. So now we're going to get a little bit more complicated because what we want to do, so the truck is an asset account. Okay, so the value of the truck is currently sitting in an asset account. And we want that asset account to be reduced by this amount. So this account, the sub-account, because it's a sub-account of an asset, it also has to be an asset, but it's what's called a contra-asset account. A contra-asset account means that it behaves the opposite of what you would think an asset would be. So it actually is an equity account, but it behaves like a liability account. Maura says, also known as accumulated depreciation. Yes, that would be a good way to name the account, would be to name it accumulated depreciation. And then the other one could be depreciation expense, and that would be more clear on the reports. Keela says accumulative depreciation is a contra asset account, exactly, which is a normal credit balance. That means it, even though, so it normally lives on the right hand side, but it behaves like, I'm sorry, it's an asset account, so it lives on the left hand side, but it behaves like a liability. All right, so we've got the sub account of truck, and it's automatically going to be there on the credit side because QBO is going to automatically balance those out for us, which is right here. Okay, so now we're going to click Save and Close. And the exercise doesn't do this, but let's go ahead and look at the reports. This is something, for those of you who are in Fast Track, this is something we do all the time. I hammer in debits and credits so you get your mind around it, and then then we go and look at how it actually affects the reports all the time. Why do we do this? Because, as I said in the beginning, this is what the accountants are asking for. They want you to actually understand. They don't want to have the mental burden of having to teach you all the time, or the physical burden of having to just do it themselves because you don't know enough. Okay? It's very frustrating to them, and they're already super stressed out. This is why we created Bookkeeping Fast Track. Okay? All right, so let's take a look at our report. So if I go to my, let's take a look at the profit and loss first. If I go to my profit and loss, we've got our new insights, that's brand new, okay? Then I should be able to see in my expenses, I should be able to see, oh, I didn't, this was from, remember I did 12/31/25, so you have to change the date. Okay, so if you go to the expenses, where is my depreciation? There it is. It's other under expenses, right? So there's my depreciation expense, okay? And then let's go back and take a look at what happened on the balance sheet. Again, I want to put in my date. And I recently learned that you don't actually have to put in the slash marks, that you only you can just type the numbers in QuickBooks Online, but I'm so used to typing those slash marks that I can't stop myself. But anyway, all right, so let's take a look at our fixed assets. Okay, so here is the original cost. So remember, before we did it, the truck was purchased and it was recorded. If you dive deep into the sample company, you'll learn that it was not recorded. The purchase was not recorded correctly. And both in the gym and in Fast Track, we talk about like why, how to fix it, all of that stuff, okay? But for now, the only thing that matters is this original cost right here. That's what it was. The depreciation is, like I said, it's a contra asset account, so you'll see it as a negative number. Normally on a balance sheet, you should never see negative numbers unless it's a contra account. So it's a contra account. So these two added together, this is the total for the truck right now, okay? And then next year, we're going to depreciate it more, and then eventually we're going to depreciate it down to zero, or we might depreciate it down to a salvage cost, but that's beyond what we're talking about right now, okay? All right, so that is our depreciation exercise with debits and credits. I hope that was super, super helpful for you guys. Let's jump over now and talk about marketing prompts. because we've got a lot of juicy stuff. All right. So as a member of the QBO gym, you are actually earn marketing prompts. Let's see. Is this where I want to go? No. This is where I want to go. So as a member of the QBO gym, you actually earn marketing prompts. I'm going to stop my screen share again. Okay, so I can look at you. All right. And the reason that I included this in the gym is because I kept hearing people say, I know that I need to post on social media, but I don't know what to say. And I just kept thinking, why do you not know what to say? Like, you're learning something new about QuickBooks every day. Every day you could go on social media and say, hey, look what I just learned. You could go on today on your social media and talk confidently about fixed assets, depreciation, debits and credits. Look what you just learned just by spending an hour and 21 minutes with me. Okay, so now you have all this fodder that you can now go and promote yourself on social media. Anyway, so this is what I kept hearing. And so I said, well, let me incorporate that. So now we have in the QBO gym, as you go through the process, you actually earn marketing prompts. So you learn a whole section about whatever, and then you, because you did all of that, you unlock marketing prompts that help you talk about it in your social media. We call them QBO quick tips. The purpose of marketing prompts is, the purpose of posting on social media is not, it's not an ad necessarily for your services. It's just a way for you to constantly wave your flag and remind people what you do, okay? And I always say, how many real estate agents do you know? How many real estate agents do you know in your life? The reason you know who the real estate agents are is because they are constantly telling you they are real estate agents, constantly. And how often do you buy a house? You know, like, you don't buy a house that often. So maybe people aren't going to be looking for a bookkeeper right now, and that's fine. Maybe they're too small. Maybe they are, you know, like, maybe they have a bookkeeper. Maybe there isn't a need for them right now to have a bookkeeper, or maybe they don't have a business at all. But if you keep waving your flag that saying, I'm a bookkeeper, not in an obnoxious way, but in a helpful, valuable way, you're giving them a QBO quick tip, then people are more likely to, when they do need a bookkeeper, think of you, you know, or like, oh, I know somebody who's a bookkeeper. Oh, they, you know, okay. So that's why we use the QBO quick tips. That's why we have the QBO quick tips. Joel has posted a video about that I created a while ago on like how to use them in marketing. And Lindsay, can we tell people about the marketing course? Let me know if we can. I can't remember what we decided. Okay. So Lindsay says I can, because I can't remember what we decided. So we have put together not just the video, but all of the marketing tips and tricks for getting clients, for using the QBO quick tips, all of that stuff. We've put them together in a course, and we're giving it away to you for free. For free. Everybody who asks for the marketing course gets the marketing course. That's what we decided, right? I'm pretty sure that's what we decided. Everybody who asks for the course gets the course. And then some courses, we're automatically including it, right? So it's going to teach you all of the stuff of how to like actually use this to get clients. Okay, but let's talk first about today's marketing prompt, and then I want to tell you a little bit Oh, how do you ask for it? Write to support@acadian.com, AKADIAN, and we'll give it to you. And poor Anthony might just stab me for blowing up his box. But I think that's what we decided. Lindsay can help, and we'll make sure that everybody that gets it. Okay, so let's talk about, did I share my screen yet? No. Okay, let me share the screen. Let's talk about this marketing prompt, and then we're going to wrap up. Okay. So today's marketing prompt, you learned about depreciation journal entries. So here's a sample post. You can put this in Canva. That's one of the things the course has in there, like how to use Canva, how to like build this out. QBO quick tip, depreciation might sound like accountant speak, but it can mean big tax savings for you. If you bought equipment, vehicles, or property for your business, you may be able to write off part of the cost over time. Let me point this out, okay? So you can't just, when you buy a thing, you can't just write it off as an expense. You can't buy a thing for $10,000. The threshold is $2,500. There's some circumstances where it's different, but by and large, the threshold is $2,500. If you buy something more expensive than $2,500, you have to capitalize it. You cannot mark it as an expense, which means you don't get the tax write-off for that, okay? It does not affect your profit, and profit is what is taxed, okay? As you use it, however, that's when it becomes a tax deduction. So if a business owner has added fixed assets to their books, which a lot of times they don't even do that, but if a business owner has added fixed assets to the books and it's just sitting there as a fixed asset and never gets depreciated, they are not getting the tax deduction. It's the depreciation that moves that over to the expense. That's what gives them the deduction. So that, like, for those of you guys who are trying to land diagnostic reviews, okay, who are trying to, you're like, this is a thing. Like, are your fixed assets set up correctly, and are they being depreciated so that you can get that tax savings? Okay, business owner, they're not going to know. I don't know, but like, well, why don't I check? I'll do a free diagnostic review for you, and then I can check. All right. Is this covered in the cleanup course? Oh yeah, thank you. Jane's clarifying, $2,500 and a useful life of over a year. Thank you. So Beth says, is this covered in the cleanup course? Well, I don't know what this is. We definitely, learning how to do a diagnostic review is part of the cleanup course, like what to look for and how to price your services, how to present it in a way that people sign up, that kind of stuff. All right. So anyway, so this is like a big thing. All right. So anyway, but can mean big. If you've bought equipment, vehicles, or property for your business, you may be able to write part of the cost over time. Just make sure it's recorded properly in QuickBooks with a journal entry. Want to get every deduction you're entitled to? I can help. Okay, so that is the marketing prompt for today. But I want you guys to see something. I'm going to stop because I didn't have this pulled up. I have been talking about ChatGPT, guys, for a while. Okay. All right, I got to show you this. Okay, so, ooh, this is good. How do I put this on the screen? Jane. Jane is, by the way, she is an enrolled agent, which means she knows more about taxes than anybody. Means she can represent somebody to the IRS. So anyway, and she also actually is our resident guru for anybody who is taking bookkeeping fast track. She answers your questions in the private Facebook group for the fast track students. So Jane is amazing. So here's what she said. Understanding depreciation is important to know when talking to a client. They always ask me if they can go buy a truck and expense it to lower their taxes this year. Excellent. All right. And the answer is they can't expense it. Isn't there there's a certain type of truck, isn't that right? Like if it's over 6,000 tons or something crazy. Anyway. Oh, look at this love. Charla, love Jane. Lindsay, Jane is awesome. Love you, Jane. All right, awesome. All right, I'm not a tax person. That's why we have Jane around. Rich says something about Section 179. I don't know anything about that. Anyway, so what was I saying? I wanted to talk about ChatGPT for just a minute. Okay. Yeah. Jane says there are differences in the rules based on gross vehicle weight. Yeah. So, but you don't have to know those details as a bookkeeper. Jane just is extra because she's also an EA. All right. So, I want to talk about ChatGPT before I let you go. We're over time now, but this is important. So, I use all of the prompts that are in the gym. I wrote myself. Because I was just like this, because they come so easy to me. It seems obvious to me what they should be. So I wrote them all in the gym. And then we are doing this exercise a week, and I don't know how long it's been. It's been a couple of months now where I said, I wonder if ChatGPT could write these. And so I fed it a bunch of our exercises and a bunch of the prompts that I had written before. And I said, okay, can you write another QBO quick tip? And it, by and large, does a really, really great job. And so now, every week that I come on here, I'm just giving you something that ChatGPT wrote. Like, I don't even write them anymore. However, here's how you protect yourself against AI. I've been talking about this a lot. I know I wrote a newsletter article about it, and I talk about it a lot, about how to protect yourself from AI, because so many people are afraid that AI is going to take over accounting and bookkeeping, and it is going to take over all of the tedious, routine, boring data entry type stuff. It is going to take over that. But what it cannot take over is your ability to understand if it's doing it correctly. Okay? Humans have to be involved. Like, humans have to guide the robots, because the robots don't know. Like, they don't know. I work in ChatGPT so much, and honestly, sometimes it's like working with a toddler. Like, they don't know. And so that's why it's so important that you understand, whether it's through Bookkeeping Fast Track or something, you actually understand how things work, how things are supposed to work, so that you can catch it when it goes wrong, so you can guide it in the right direction. I'm going to talk about that more in the newsletter. The reason I bring it up now is because I used ChatGPT to create the prompt, and it was not good. And I'm going to show you why. Okay? So, Joel will share, if he hasn't already, he'll share the link to the ChatGPT prompt, so you can actually get my whole thread. You can just get my whole thread, and you can see all the conversations I have had with ChatGPT about these QBO quick tips. Okay? So here's what I wrote. So right here is where it knows me so well now that I don't even have to tell it anything. All I have to do is give it the scribe link, and it will know to write the QBO. I mean, I had to train it to do that, but now I just give it the link, and it gives me the QBO tip. Okay, so here's what it originally wrote. It originally wrote QBO quick tip. Got fixed assets, don't forget depreciation. It's a non-tax or non-cash expense that reduces your taxable income over time. QuickBooks doesn't do it automatically, so you'll need to enter a journal entry to keep your books and tax prep accurate. Not sure how? I can show you the ropes. Now, somebody tell me why that is a bad QBO quick tip. Read it again. I'll make it bigger. Can I make it bigger? Let's see. Okay, this one right here. Joanne says, wrong link. Oh, yeah. Joel, I don't know why you gave him the link to the study hall. We need a link to the ChatGPT. I'll generate again. I think I can. There. I copied it. I think I can put it in there. There we go. Okay. Somebody read this and tell me what is wrong with this. Why did I tell it to rewrite one? I'll wait. What was wrong with this prompt that it made me want it to write a new one? Nobody can guess? I don't have any guesses? I don't have any guesses? Oh my gosh. La da 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 da. Okay, wait, here we go. Land is a fixed asset and you don't depreciate land. There we go. Okay, so Annabelle, land is a fixed asset and you don't depreciate land. That is correct. Okay, but that's not the answer to the question. Jane says, business owners don't want to make a journal entry and they don't understand non-cash. Yes. Maura says, accountant speech. Yes. Beth C, ding, 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 ding. Yes, you got it. It doesn't explain the benefit to the owner. That's the problem. Like, that's the problem. You maybe have cheated. Maybe you cheated because you see what I wrote here. Is I said, can I see a version that talks a little more about the benefits to the business owner? That is, that's it. This one is so full of jargon that, like, yes, it would serve the purpose of waving your flag and saying, yes, I'm a bookkeeper, okay? But what it doesn't do is articulate why the business owner should care about this. Okay, and so that's when I said, can I see a version that talks a little more about the benefits to the business owner? And here's what it wrote. And this is the one that I gave you today. This is the one that is linked up in your in the exercise of the week, and the one Joel put in the chat. Notice it says right here, let me know if you want a version tailored to a specific industry like REI or construction. How about you do that? How about you take the QBO quick tips, put it in ChatGPT and say, here's the one, just use the link I gave you, whatever, and say, yes, I would like one. Once you get the link, it's your thread. You're not commenting on my thread, it just becomes your thread, okay? So you can tell it that, yes, I specialize in the beauty industry, or I work with specifically with wedding planners, or I work specifically with food trucks, or whatever it is. So you can have it do, like, it can help you so much. All right, guys. That's all I have got for today. One more thing, at 3 p.m. Eastern time today, I am filming a very special episode of the unofficial QuickBooks Accountants podcast with Alicia Katz-Pollock. All of the guest hosts, of which I am among them, are going to be on the call today because it is the 100th episode of the UQB podcast, and we are filming it live. So Joel, if you would put the link in there. We also sent it in the newsletter this morning, so if you guys have that, if you're not getting our newsletter, if you're not getting our free course, write to support@acadian.com. And what am I trying to say? Anyway, the link is in there. No, that's not the link, Joel. That's the link to the show. I put on the live stream planner the link to today's. It is, you can join us live and ask questions, interact with us, me, Alicia Katz-Pollock, Dan DeLong, Veronica Wasek. I can't remember who else is going to be there. But anyway, so we're going to be there live on the episode today. Yep, that's the link. That's the live podcast link. So if you want to join us, that is 3 p.m. Eastern time today, and it's going to be a lot of fun. So, all right, guys, that's it. Woohoo! Christina says she learned a lot. Awesome. That is what I always try to do. Value bomb you guys. I want to value bomb you. Just made up that term just now. Value bomb you. That sounds weird. Value bomb. All right. Anyway. All right. Looks like I think I don't have any questions, so it's all good. And you guys have a fabulous, fabulous weekend. I'm headed out of town again already. I'm going to be at Bridging the Gap. If any of you are going to be there, I'm going to be at Bridging the Gap this coming week. But I will be back in time for our live stream next week. Can't remember what the topic is off the top of my head. I'm sorry. I wrote it down yesterday. I forgot. Anyway, it's all good. So glad to have you guys. Have a fabulous weekend. I can't wait to hear your success story. Bye-bye.